How's it going, everybody? Thank you for stopping by. My name's Antonio. I'm a 27-year-old college dropout who lives with his parents and has no idea what he's doing. So please proceed with caution. This discussion is also going to be general and impersonal in nature, and it's going to contain forward-looking statements and a lot of hopes, much of which may be empty. So again, proceed with caution. There's not going to be any financial nor professional advice of any sort. That all said, Adrian, thank you for sitting down with me, sir.
Thank you for the invitation, Antonio. It's a pleasure to be here.
Oh, the pleasure is all mine. I've been trying to follow your work on Twitter for a while now, and I have a vague idea of who you are and what you do. I don't think I understand everything because a portion of it is in Spanish. Unfortunately, I was not able to read your blog, though I did try. So let's just make sure we're all on the same page. Why don't you tell me who you are and why you think you're worth listening to?
Yeah. Okay. My story is very short because I'm still very young. People don't usually know that because for all my knowledge on mining, but people usually say, "Oh, how old are you? Maybe 27, 28." People usually say 27, but actually I'm only 23. And the thing is, I hated the university a lot too. I finished my degree in economics, but it was after a long 5 years. I still hate university. I think it's a waste of time as the modern education system, but that's a different topic. After during university, as I hate it, I decided to focus on my own business and learn on my way, especially because since I was 15, I started to be interested in finance and stock markets. And with 18, I started on mining and natural resources. The story was that a big, well-known fund in Spain called AZ Valor, AZ, a big fund, like 2 billion asset under management. And they started the fund and they put most of the money in natural resources. And we are talking about that year was 2016, more or less.
Nice.
Literally the bottom of the commodities. Commodities and mining companies has been going south for more than 5 years. The most toxic assets in the financial markets. Nobody wanted to touch them. And then these guys come and say, this is the opportunity. And that was very impressive to me. I decided to learn more about the sector. And I fell in love with natural resources, speaking with people, with management teams, with investors, travel to mining conferences. I say, I fucking love it. I love this. So I decided to just focus on this sector. During COVID, well, when I was 19, I was offered to start a podcast as co-host, Value Investing FM, with my partner Paco, and now we are the biggest podcast in the business segment in Spanish.
Nice.
That was great. Basically, because we saw the potential of podcasts, and we were the first, mostly to start a finance podcast. So now, we are still the number one.
Well, congratulations. That ain't easy. What do you talk about on that podcast?
It's investment in general.
But not natural resources specifically.
No. Yeah, okay. Just general. And most of the podcasts are interviews with analysts and fund managers in the Spanish investment industry. And that was when I was 19, during COVID. In 2020, I started my own company, Godas Research. Basically, under that umbrella, I do anything in mining. Advisory to companies, to high net worth individuals. I have a kind of newsletter, some analysis of some commodity markets, like a big presentations on tin, nickel, oil. That's it. I have done some physical commodity trading. I'm working right now in an M&A process with a gold asset in Africa. I have done mostly anything in natural resources.
Sounds like you've had a busy last 5 years, but you've also had a busy
Yes.
summer too, by the way. I wrote that down. You moved to Bulgaria, you're doing the CFA course, you went on site visits in Canada, you're giving presentations in Germany. You had your own conference in Madrid, in Spain, and probably a bunch of other stuff that I don't know about. All of that also, all of that you're doing, is fascinating because it's happening on the background of a very unhinged global economy and geopolitics, right? So you're probably learning a lot more than you would if you started in a more cushy environment where less was happening.
Yep. I agree. I totally agree. And the last 4 years of my life has been crazy. Moving as fast as I could. I love to keep busy doing stuff. So yeah, we try to do an annual conference in Madrid with fund managers talking about ideas and inviting some companies. For example, in the last one in June, Fire with Think CEO Brandon McDonald, he came and he did a speech on junior mining sector. It was a very, very insightful. And we try to do the conference annually. We did it in 2020, just before the COVID started, like in February 2020, just before arriving in Spain. And then this year, and we want to try to do it again next year. And yeah, at the same time, I passed the CFA level 1 this May. Top 10% this percentile. So yeah, I'm very happy with that. Yeah, I moved to Bulgaria in February. I'm living here. I'm very happy here. It's cheap. I save a lot of taxes. There is a big Spanish community. I had the opportunity basically because my best friend moved here and he works here. I say, yeah, why not? Let's go. Yes. My idea was to live here only for 4 years. For 4 months. I'm still here. I'm very happy. So nice. Yeah, I'm busy, and this summer has been absolutely crazy. I spent 3 weeks in Canada on the West Coast, basically Vancouver, Golden Triangle, and Yukon. Nice. I visited 4 mines, 4 site visits, a lot of tourism in Vancouver and all the areas around. I fell in love with Canada. It's so beautiful.
It's not hard to fall in love with Canada. I mean, you being in Bulgaria, and then you're now in my hometown of Sofia. You also have a beautiful mountain behind you, and even though it's a relatively big mountain, it goes almost 3 kilometers high, but it's nothing compared to Canada still. So, and I haven't even been to Canada. I'm only speaking out of pictures. I do hope I'm gonna maybe meet you on a site visit one day. Who knows? Do you think your investment strategy has changed a lot since this summer, though, because of how busy you were and all the experiences that you've had?
I would say yes, because it was the first time. All the site visits I did in the past were in Europe, so you are close to village, you are close to the populations. In Canada, you are in middle of nowhere, absolutely middle of nowhere, and that was a very insightful and instructive trip. Because one thing is last year in September, I was in Bosnia visiting Adriatic Metals project. But that's a thing. Another one is go to the Golden Triangle. You have to pick a plane from Vancouver to Terrace, and then 4 hours in a car, in a gravel road, and cross a river by boat to arrive to the campament. No, absolutely nobody living all around. You are so isolated. If you want to go to the site to the mining area, You have to pick an helicopter, no supplies, no internet, just the Wi-Fi complement. It's totally crazy. And for me, it was make me think a lot about distance and logistics and exploration companies and how they all, the biggest, I believe that the biggest problem and the biggest issue for mining companies are not geological, but capital. Because there are a lot of good management teams, really good and really good geos, that they just need time and money. But if you are in a mining in a small cap with 20 million market cap, you rise 2 million, that's peanuts in mining exploration. If the results are not amazing with bad liquidity and a low liquidity, the company will slide and go minus 50%. Then you are a 10 million market cap company. You need to raise more money, and you're gonna blow up the share structure. So the capital and the general market affects more than I believe it. All the exploration stuff.
Does that keep you away from explorers though? Because I know that you like your producing companies most. So
maybe in 2020 I prefer more development and exploration stories that I do now, and now I prefer more producers, because I remember that in 2020 I had only one company with revenues, my portfolio. So that changed, and now I prefer to keep a more producer, maybe more last stage developers. Only a couple of explorers, well, not a bunch of explorers, but that should be all the time. Each day, I believe that this is the right way to do this, is just to allocate like a 2% of the portfolio to these explorers. Like 2% this one, 2% this one, because if you put more money than that, you can blow up your portfolio pretty quickly.
I do pretty much the exact opposite. I think I have one company with revenues, and I only have it because I'm not allowed to sell it. It's a Russian gold company.
I can guess which one. Yeah,
they've got revenues though, so they're also the lowest quartile in terms of production expenses. Some of the best assets in the world. It's unfortunate what's happening there though. But for the rest of it, no revenues in there for me. And I think maybe it's a capital thing. Like maybe you just got more money to invest, and when you start stacking up more money, it makes more sense to be if you're investing 10,000-20,000 dollars, and you have to diversify between 10 12 companies.
Let's do it.
Does it? Yeah, that's interesting. What about jurisdiction though? Did Canada make you think about jurisdiction? Like, okay, I don't want to be in Canada because of how expensive all this is, and how easy, for example, things happen in Africa as opposed to Canada. Did it make you think about that?
Yeah, that was exactly one of my thoughts. Everything is so isolated that even with a good project, you're gonna be fucked. Because they are so isolated, everything is so expensive. The wages, the helicopter stuff, that it's only worth, for example, for this kind of early stage explorers, okay, looking for grassroots. And if you have however, if you have a good asset, Canada is the best country to have the asset. That's a thought. A good friend of mine, he's engineer. He told me. I was asking him about the jurisdictions, and he said, if you have a tier 1 asset, the best country is Canada, because it's safe. They have a long permitting process, but it's safe with security, no terrorism, no nothing where. And if you are in a tier, you have a really good grade and a good location, it's gonna be built, and majors will fight to take the company. But only if you have a really good asset. Like, for example, I'm thinking, Bruce Jack, for example, Pretium.
Yeah,
it was a monster, a tier one asset, obviously. And Pretium built it itself, a more than 600 million capex project. And finally, Newcrest took the asset. But otherwise, you have many projects in the middle of nowhere in Canada that they are good, but they are just not interested for what the market is. In the opposite side, you have Africa, and that's the second thing he said. Otherwise, go to Africa. If you want gold, go to Africa. It's cheap to work there. It's less explored than other areas. So basically, you have to just go to the middle of, just to the forest, and pick samples. Just pick samples, do some geochemistry, according with following the geological setting, looking for faults, pick samples, and you will find some outcrops with gold. Go and drill. Nothing here. Okay, next target. Drill. No, here. Okay, next one. And finally, you will find something. Because Africa is a place where you can still find a lot of outcrop gold assets. And you don't need that they have a high grade. There are a lot of, for example, the Horizon Gold, they just put first pour today. I had a Horizon on my portfolio for more than 3 years. So it's very exciting to me to see finally the mine producing. And the average grade is pretty low. I think it's 0.8 grams per ton. It's low, but in Africa you can do it because the cheaper labor costs, energy costs. You can easily do a carbon leach operation or a heap leach operation, where otherwise in the West, try to permit a heap leach with cyanide is far more complicated, especially after the Somerville disaster in Colorado 30 years ago. So you have plenty of companies like Orezone, Osino, Predictive Discovery, Rosca, and if you read the past releases, they just go there looking for faults, for the right rocks, the right geological setting, picking samples, and drill it until one day you find it, and then you can develop the asset and put it in production like in 4 years. That's the most, in 4 or 5 years. That's amazing.
But you don't want it to be too high of a grade. Is that what you're saying? Like maybe, if the value of the rock is $1,000, you don't want it to be in Africa. You want it to be Canada. And if it's in Africa, don't touch it because it's going to get nationalized. Is that a thing?
Not exactly. I could say that basically in Canada, everything is so isolated and everything costs a lot of money because it's expensive. It's really expensive. Canada is an expensive country. So to justify that investment, the developing that asset, you need something big with enough grade, with enough tonnage. In Africa, not. In Africa, you can build even privately without a public company. You can build very small assets. For example, as I said, I'm involved in an M&A advisory job with a gold asset in Africa. It's less than 500,000 ounces, and you can perfectly build it. It's extremely high grade open pit. It's very easy. It's just a good place to build a gold mine. Very easy.
Do you think there is a cutoff amount?
And honestly, that's another thing. I believe that their jurisdiction risk in Africa, honestly, I think is usually overrated, in my opinion, because you can see that, for example, Australia, Queensland has double the gold royalties, for mainly from 10% to 20%. royalty on revenues. That's Australia, that's Queensland, a tier 1 jurisdiction where everybody wants to go to be there. You have Spain in the West, in Europe, and you can see like how many assets the politicians promise to executives. Yeah, you can build it, and we're gonna do a lot of jobs and blah blah blah, blah. And then they deny the permit. I think we should, and that's a personal thing. And now that I'm in Bulgaria, I keep thinking about this. There's the geopolitical risk, the jurisdiction risk is usually overrated in Africa and underrated in the West. Because I see people thinking, no, this is US, this is in Canada, nothing banana will happen to this is not a banana country, nothing will happen. And then they fuck your project. And, we have seen many of that in US, in Arizona or California.
Rick Rule, I speak to Rick Rule often, and he always tells me that people just somehow prefer Western countries to steal from them as opposed to taking the risk at a different jurisdiction, something among those lines. People are more comfortable with a government in Canada, for example, that is going to steal your project, as opposed to a government in Africa that maybe is not going to steal your project, but you don't know that because you're not even going to put the time to research the jurisdiction, because you're biased on it, I guess. And I guess that makes sense, though. So, do you think there's a cutoff? If that was what I wanted to ask a couple of minutes ago. Do you think there's a cutoff value of the rock? Like you can say, like if the rock is not at least $100 in Canada, don't even try it.
Yeah, for example, I don't know, in underground operation, you have seen so many fails in the underground Canadian industry. Rubicon Minerals. Now we have a poor gold. There are big disasters in the underground operations. Hope Bay in the north that was taken over by Cameco, or Alexco. Another big fail take over by ECLA, but after massive dilution and massive shareholder destruction. So that's exactly what I was talking about. To have a real good underground operation in Canada, you need more than $150, maybe. So that's a big rate. And on open pit, I have seen companies in Peru processing top 5 grams per ton of gold. You think you can mine that in the West?
Not even open pit.
No, it's mostly impossible. So
maybe that's the reason why so many uranium mines end up working if they get through the permitting process, though, because uranium is oftentimes high value of rock. It's challenged, though. But now that I'm mentioning uranium, might be a good point to pivot in the conversation and talk about sort of a breakdown of your own portfolio in terms of commodities. Maybe if you could give me a breakdown in what you're invested in. I know you're big on tin, but exactly how big? What else do you have in there? Stuff like that.
Yeah. On tin, my only position is Alpha Moon, because I consider any other projects, they are not worth. In a risk return analysis, it's not even worth to look at any other stuff. Why? Because Alpha Moon asset is a really low cost producer. It's the only one that can make money under $15,000 per ton. It's the only one. It's producing already. There are more than 10 years mine life. They're gonna expand capacity. They're gonna rise from 12,000 tons per year to maybe 19,000 tons per year of tin. They're going to expand capacity. It's cheap. The management has done a great job. I think it's not no debt. I think it's not even worth to mess with other projects because, for example, with the recent collapse of the tin prices from 40,000 to only 21,000 per tons, half of the industry is losing money or in break even at this price. Even, for example, Metal X is barely making any money. Other projects like Elementos, First Thing, the IRRs basically just crashed because the tin prices barely on the cash cost.
Well, so it might be that sort of makes me think that why even stay in tin? I mean, if you really need a company to work at lower tin prices, I guess that means that you have a safety margin, but the upside would potentially be capped. Isn't that true?
I don't agree. I think that people usually go to a high cost producers looking for more leverage.
Yeah.
But the reality is that all the times I did that ended bad, ended in the wrong way. Because they are the high cost producer for a reason. That's usually that you have a bad quality deposit in a bad place with maybe social issues and maybe with technical problems. I have seen many times that they are the high cost, the commodity price rise, and then you're gonna say, okay, I'm gonna make a lot of money because the leverage. But then the man say, no, we have to stop the mine for technical issues, geotechnical issues, and the roof collapsed. So I said, no, it's not good. I mean, you can buy, my strategy is basically to buy cheap optionality. I want to buy when commodities crashes, when commodity price crash, I want to buy the best assets at a low price because they're gonna keep making money and the stock price won't collapse. They're gonna do a minus 80% because they're gonna still make money. And when the price rebound again, they're gonna make a lot of money. So the company still will fly. So
that's if the price rebounds, though, right?
For me, it's a risk return analysis.
But that's if the price rebounds, and I mean that makes sense if you think that the price is going to rebound. So
yeah, of course, the price will do. I have spent more hours looking at tin industry that most of the people have done. And this price is absolutely stupid. I mean, yeah, there are basically for two reasons. Mainly, the semiconductor industry is now in a glut after all the deficit post-COVID. The semiconductors industry is facing a big glut. All the producers like Taiwan Semiconductor, Samsung, everybody are building inventory. So the demand is decreased, and there has been recently, last week in Reuters, they published Andy Holmes, I think is the name. He published an article about a Chinese short attack on the tin futures market. But it will rebound, and the tin price will fly over 40,000. I don't know why. Maybe next year. I don't know, but it will fly. And will be fireworks because at this because the demand, looking at the long term, like 4 years, demand will be higher than now, and that's a fact because a lot of companies are building new capacity on semiconductors, and there are more companies trying to use tin as in chemicals industry, so the demand will grow, not so much, but it will grow for sure. And basically, you have no new projects. The only big project incoming in the next 4 years is the Mapa South, the Alpha-Min project is the only one. Other big project, I spoke about that on the presentation, but I just did a research on each project, and most of them doesn't work, or under $30,000 per ton of tin price, or they have metallurgical issues, like for example, what's the name? Sirambet, a big project in Kazakhstan. This is just a very complex mine. It has been in developing for more than 10 years, so I don't think they're gonna build that. And other projects are just very small. So basically, demand will increase, no supply. Big mines like the Chinese ones are facing declining rates, and with the actual collapse, no new capex is coming. So for me, it's just clear, just clear as waiting and buying more for me in the meantime.
Someone told me when I'm looking to go irresponsible on a commodity that I should be looking for a commodity that has an undeniable demand and a very challenged supply side of the story. Meaning demand is definitely going to be growing. I mean, it's definitely going to be here and potentially it's going to be growing, but the supply side is very challenged. And it seems to me like you think tin is that. And I'm thinking about the demand side, whether it's really as undeniable as, for example, uranium, something that I'm big in, because tin is not as hard to substitute, right? If I'm not mistaken.
No, it's well, it is. It's I spoke. I can open my presentation just to. I don't remember exactly how, but we did some work on that. But basically, you can do it, and many companies try to do that, but it's not really easy because, for example, they are trying to do some resins, so new chemicals in the semiconductor industry, but it's more expensive. It's the thing add more complexity to the assembly process. They're trying to use, I think, silver in other segments. They're trying, but silver is
expensive.
Ton per ton, it's expensive in dollar terms. So you can face some substitution if obviously the tin price go to 80,000 or something like that. But it's not I'm not really afraid of substitution effect at all.
Okay.
For example, for many reasons, the last decade, tin has been flat and at low prices. That's one of the reasons why nobody invested in tin before. And one of the reasons were the tin plate demand that basically has been decreasing all the years. But finally, it's finding the plateau at the end, the bottom, and it has basically already substituted for aluminum. So that decreasing demand is already stopped to fall. And another of the reasons were the Myanmar supply. Myanmar started to produce a lot of tin from scratch. Like 15 years ago, almost no production in Myanmar. And then in only 4 years, it became the third biggest producer in only 4 years. Basically, they found from scratch on the border with China, they found a lot of big deposits, high grade deposits. The Chinese rushed there to mine it, open pit. I mean, we're talking about a really high grade open pit, so they put a lot of supply in the market from scratch, but they are being depleted right now. So most of the open pits have been depleted and they are moving to underground operations. Most of the Chinese, due to the COVID restrictions, they are back to China. There are some moving parts there. So basically for the last 2 years, the production is already declining in Myanmar. And actually with real reserves, Myanmar has reserves for only 3 years. They will probably find more along the way, but the declining rate will be high. So basically, the industry is facing a big demand supply gap.
Yeah, supply shortage. I can see that on here because I'm looking up the biggest producing countries. Seems that most of them are in Asia, China, Indonesia, Burma, as you mentioned. Then the other part is South America, Brazil, Bolivia, Peru. Challenging in terms of mining. Brazil maybe not as much, but Bolivia and Peru seems quite challenging.
And Indonesia is basically everybody's losing money right now in Indonesia.
Wow.
At this price. I think the PT Timah, the national state company in Indonesia, I think the cash cost after the inflation is like 28,000 or something like that.
Wow. So they're losing money right now.
And the situation is in Indonesia is pretty sad because I don't know if you are familiar with offshore mining in Indonesia.
They go, what do? They take it out of the bottom of the ocean, something along those lines. Yeah. Sounds kind of crazy and expensive too.
Yeah, the fisherman basically took the boats and go to the sea to take a cassiterite from the seafloor. And as you can imagine, it's not the most ESG way to work. And recently, the government has canceled more than 1 million acres of licenses and thing.
So sounds still like tin is also a demand story because what do we need tin for? It's mostly in electronics, right?
Yep, half of demand is electronics. It's the part that you use to ensemble the chips and in the solders. And the other half is miscellaneous with chemicals, with tin plate, alloys, and different stuff. But mainly semiconductors.
Hats.
So I'm very
make hats.
Yeah, I'm very bullish on tin. I love coal too, and energy in general. Coal, oil. I think I'm pretty bullish of them. Basically because it's the backbone of the modern economy, and everybody hates them. So basically, no capex, no investments, no supply.
I agree.
It's just that.
I agree on coal and on oil. I'm sort of still not sold on the tin story. I want you to sell me on it because it's when I hear your thesis, I can't help but notice that it seems rather closely correlated to stuff like, let's say copper, for example, in that it's a prosperity metal. You know, it goes up when times are good, the economy is growing, consumers are happy, and they're buying stuff. And that doesn't sound like the economy that we're headed for, at least over the short term. So do you think that's I mean, is it an issue for tin if we go through a recession? Do you expect prices to fall a lot more?
Well, the prices already fell a lot. If you ask me a few months ago, if we would see this price again, I would say obviously not, because half of the producing countries will be losing money. So I would say you are crazy. But in recessions, anything could happen. But I don't care, honestly. I just accept that a recession is coming, and big part of it is pricing, in my opinion. And in my opinion, it will be a far more loose and smooth recession that people is thinking of, because I have my theory that this generation is basically lived through 2008. So for most of the people, a recession is 2008, but that's not the history. The reality is most of the recessions are just for a few quarters. They are more loose. Nobody remembers them after a decade, like 2000, 1990, 1958. Nobody have heard about those recessions. Or for example, have you heard about the recession of Roosevelt in 1937?
No, everybody remembers the Great Depression and doesn't really talk about anything.
Everybody remembers the Great Depression, but nobody remembers there was a recession in 1920 and 1937, just before the Second War started. US was going to a recession with Roosevelt. Nobody remembers that because the war started and the machine war started to work. So most of the recessions, nobody remembers them because they are small, only for a couple of quarters. And 2008 is just a 10 sigma event that only happened. It's a few decades. So I don't think this recession will be hard or very long. So if the tin price is going down, as I said, Alphamine will be the tin company with less downside because will be the only profitable company. And I will keep. By the way, I have a lot of cash on silence. Okay, so if a crash is coming, I will be very happy to buy a lot of stuff. That's it. So yeah, I don't have any issue to be just waiting.
How long do you expect to remain bullish on? Like how long do you need to stay in the tin trade for it to play out properly? And what's your exiting strategy when it comes time to sell?
I think at the right time in a long bull cycling thing, maybe, I don't know, a few years, I think Alphamine will just basically, somebody will come to take it over. In the meantime, just growing production, finding more tin all around, and get dividends. That's my plan. In the same way that coal companies are doing, just minting cash, doing some buybacks, and give dividends. That's it.
Sounds like a good story to me. But what's wrong with it? Why is nobody paying attention to this besides you and a few other tin barons on Twitter, as you call yourselves?
Basically, because people just say, we are in a recession, we won't buy anything. That's it. And what will happen that once the companies are stocks and commodity prices starting to booming again, they're gonna say, "Oh yeah, what a good time to buy again." But maybe you will lost the first bagger.
First leg, already. Yeah. Is it mostly in a retail market though? Because I can imagine after what did tin do? It did like 300% run and then a 60% crash, like within 2 years. So institutions are probably out of it, right?
Yeah, because it's just a very small market. The tin market, I think it's only 7 billion market per annum.
Others, how do you know how much all the companies are worth? I'm trying to compare it in size to uranium, for example.
Yeah, the global market. The global market, it's $360,000. Sorry, 360,000 tons per year.
Okay.
So means per 21,000, you have the number. And
okay.
I think it's depend on the price, but it's maybe 7 billion market per year. So it's very small. It's a very small one.
Okay. A lot of the things that you're telling me and that you're attracted to, that you're looking for as an investor, are just constantly reminding me of uranium, which I've mentioned a couple of times. What do you think about uranium? I mean, we have an interesting supply story there. The demand is undeniable. What do you think?
Honestly, I hate it. I fucking hate it. I fucking hate uranium. I was an uranium believer, and the uranium fever a few years ago. When I started in mining, actually, more than 5 years ago, and basically it's a narrative commodity. It's a very opaque market, very small. Basically, everything is controlled by a few utilities, a few traders. Most of the demand supply data is biased and flawed with many pitfalls. And the reality is, I have been hearing the same fucking stories for 5 years. Everybody's telling me, the demand is growing, the supply is fucked, nobody invested in uranium. The reality is that the story is the whole opposite to tin. In tin, nobody has invested, no capex, demand is growing, so you have not enough thing. In uranium, the whole opposite happened. That the last decade, everybody invested in uranium. Even Goldman Sachs started an uranium trading desk. Cigar Lake was built in 2014, I think, when the uranium prices already collapsed. So basically, it was a massive glut of uranium, a massive glut. So the prices went to only $18 per pound. And basically, all the companies had to cut production basically to stabilize the market. MacArthur River, Kazatomprom. So I think it's the whole opposite. And then you have all the secondary supply from underfeeding. I have here so many narrative that Kazatomprom was building a long-term affiliate in Switzerland, that the 232 petition in US would save the nuclear industry. So many stories. Basically, I don't believe it anymore. I think
when's the last time you got updated on all that though? Because we're done with the underfeeding. We're going to overfeeding, for example, now, and there's actually a lot of things happening in the last I want to say maybe 6 to 8 months.
Yeah, but I have heard that for 5 years. That this is coming now. I have here Rick Rules talking about uranium science 2015, and he's basically telling the same story over and over again. And all the companies, honestly, the valuations are stupid with no sense. All the companies are trading at one time, NPV, still in development phase, without construction, without financing. I spoke with some people with they did really due diligence on the uranium sector, and utilities, they have already covered for 4 years their requirements. And they, according to this person, they don't have more requirements until 2026.
That's not the data that I'm getting from the fuel buyers that I speak to. But I wanted to touch upon another point that you made about the valuations. Excuse me, was that do the valuations matter in this case? If we're sitting now at $50 uranium, but Cameco is coming out and saying nobody's going to be producing uranium unless the price hits 90. That's almost a doubling of the price. If such a move is as probable as it is in uranium, do the valuations matter? I mean, the stocks are going to move nonetheless if the price actually moves to up in the hundreds.
Well, all the gold companies say that the gold makes sense only at 3,000. And why gold is not at 3,000? Everybody say that silver must go to 30, copper at $5 per pound. All the commodities companies say the same, and I have the feeling that uranium is the only one that considered themselves so special that we have to put on studies a higher number than the spot ones. It's the only one doing the stat. I remember a few years ago when companies published a feasibility study when the spot was at $30 per pound, and they published feasibilities with 50. I was like, this is the only industry where nobody will say anything for doing that. Imagine a gold company putting a scoping studies and putting $2,500 per ounce. Everybody will say, "Oh, you are crazy." But uranium is like a bubble, life with another rules. So, look, if you want to ride the uranium bubble, you can do it. I'm sure you're gonna make a lot of money. But most of the assets are fucking garbage. Most of the management teams are the most lifestyle companies I have ever seen in the whole mining industry. If you want to ride the bubble, just buy a physical uranium, Cameco, Kazatomprom, or a good developer like a Global Atomic, and that's it. Don't try to mess with other stupid shit. That's
Okay,
my
I think
opinion. That's my opinion.
no, I appreciate your opinion. Hearing different opinions on the thing is are important. Um, if you have a few minutes, you might want to spend updating the thesis. But again, as you said, maybe I'm just delusional, but over 50% of my portfolio is in uranium. So I also want to I want to believe that it's going to work. And the way that we think that it's going to,
think another fact. Yellow cake and sprouted uranium, they have taken out of the market more than 30% of the annual supply, more or less.
About that, yeah, about a third, yeah, since they exist, yeah.
And 30% of annual supply in the spot market, and the commodity price just moved from 30 to 50. In any other commodity, you buy 30% of the annual supply, and the stock price is just double or triple or quadruple.
That's because
so
it's
what
the
that
spot
means to
price.
me is that exactly. So for me, is that basically there are too many shady things. It's too shady market. The real deals are being made in closed doors. So for me, it's just a no-go. And basically because I have spoken with a lot of executives in the uranium mining industry that basically they quit and they left and they say, look, this is a cult. This is a total cult. I don't want to be here anymore. And basically they left and they started other exploration companies because they just say, I can't deal with this. Of course, I'm not going to say their names, obviously.
Yeah, don't worry about that. It's interesting. I would think that that's because you're talking about the spot price versus the long-term contracting price, which is where most of the action happens in the uranium market. I believe there's something like 70% of the market in uranium is long-term contracting, or even more than that. If I could be wrong, but that's what I'm remembering. So maybe that's one of the reasons why it's happening. But that's really I guess that's the main catalyst that we're waiting for. So something that I'm really waiting for to see, is it going to work? Is it not going to work? Is the long-term contracting, when that starts ramping up more than it already has in 2020, and we start seeing the long-term price moves. If nothing happens by then I might start asking more questions. But yeah, no, I appreciate your opinion. It's good to hear a different opinion every once in a while. Most people that I have on, they're bullish on uranium. So hearing a contrarian view is interesting.
I just hate it. I have been mining for too many years to still read about uranium. I did that when I was young, not anymore. I just say because I just keep hearing the same stories. I saw the same memes year after year. Everybody's telling me that the next contracting cycle is starting next year. Then I hear stories about, but the next catalyst for massive explosion will be sprouted uranium listed in US. And then the SEC say, no, this is garbage. You don't gonna list this in US. And everything is just so delusional. The valuations that they believe they are special. I just hate it.
This might be sort of on point to start wrapping up the interview with questions about what you don't hate. And I tried to close off my interviews by asking the gun to your head scenario question, which is it goes like that. If someone was holding a gun to your head right now, and you had to sell all of your stocks and use that money to buy just 3 companies, where would you put that money in?
Gold. In gold, you can put mostly anyone. Everybody's meeting cash, very good team and management teams out there. For example, Whitehaven, ARC, Alpha Metallurgical, New Hope. You can buy any. On Ting, Alphamin, and the third one, I'm going to say Adriatic Metals, just because I have visited. I love the asset. I have been there for a long time on the stock. I really like the team. Spanish, by the way, one of the mine managers building the mine is Spanish. And I have been there. It's a Bosnia is an amazing place to work. I have been there. I live in the Balkans. I think Balkans are a region with a huge potential for industry, mining. So yeah, I'm gonna say Adriatic.
Adrian, I really appreciate your time. I appreciate the contrarian view, and it's been a great pleasure. I also congratulate you for having strong nerves to stick around with me for over an hour now. So thank you for your time.
Thank you, Antonio.